Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And so here I am recording this on Wednesday, November 6th at about 4:45 Eastern, about 15 minutes before AMC starts their earnings call. So I'm going to get us connected so we can tune into that. But just so you know, here looking at the chart, this is the 10-minute time scale. During the earnings call, I will switch over to the 1-minute time scale just so we can see how dynamic it is in response to the call. And yeah, we did close on the day up pretty nicely, up 4.33%, closing at a price of $4.58. But unfortunately, as you can see here, we did pull back a little bit, about 5.5% in the after hours, hitting a low. The first 20 minutes after the market closed of $4.15, being 5 cents below $4.20, which is one of our favorite numbers. And yeah, so this could be a great dip buying opportunity. This could also be the beginning of a slide. So we will have to wait and see. And yeah, so I will get us connected to the earnings call in just a second. But I did also want to note, I do typically do AMC videos on Fridays. If I'm a little bit behind schedule, tend to get them out on Saturdays. So if you want follow-up analysis on this, make sure that you tune into that on Fridays. And also on Saturdays, I started this last week. I go over options calls or puts as well, but for all of them right now, they're calls that I'm interested in or partaking in, and I do have some AMC calls, so it might be a nice follow-up. I do put timestamps on that so you can access the ticker of interest. But yeah, anyways, I am just going to flip over to, let's see, the web browser so we can see here AMC Holdings. We might be able to go over some of their report, but I just want to make sure that we are connected to their stream first. And so let's see. Press release, news and events. This is the first stream I've done this earnings season, so it might take me a second to get everything connected, but let's see. We got the, I just want to see like a quick link to it. View source version on Business Wire. Let's see. This is older, so maybe I just want to go to earnings calendar and we will see this here. So November 6th, 5 p.m. Eastern, so that's in about 12 minutes. Earnings release, we can look over that. I just want to make sure that we are connected to the audio earnings webcast. And so I'm just going to get that connected. And I'm actually going to flip this over to, let's see, what's the best way to do this? I'm just going to flip it over to my screen, type in my info, and then we can get ourselves connected. All right, so just typing in the info, and we are now, let's see, I just need to grab the window over. I use this bigger cursor, but it makes it kind of harder to grab things, but a little bit easier for you guys to see. But yeah, anyway, so we are connected to this. I do have you guys plugged into the audio, but I have it muted because they're probably playing some music that might get me a copyright strike. So I will put my headphones in, and whenever the earnings call does start, I will connect you guys to that audio, and then we can, see what's going on with the chart here. But I'm gonna, wait 5 minutes to put the earbuds in because, I feel a little claustrophobic with them in when streaming and stuff. But yeah, here, so this is the 10-minute chart. I don't have any drawings up here, so I will throw those back up. Lots of lines, which I did draw on the daily time scale. So I guess I can go over that in the meantime, and then maybe we can quickly, go over their earnings report. But so what I see here, what I've gone over in those weekly videos is we have this uptrending level. We did get kind of a fake out break below it. We did get a launch above this purple downtrend that I have, which I feel like is a pretty notable one. It goes back to the high that was hit on, let's see, June 6th. That was about $6 a share, almost 4 cents below at 5.96. And that's kind of been the high in this range that we've been trading from about $4 up to about $6, following, the big moves that we saw in May when we hit a high during market hours of around $11.88. And we do have these two gaps to the upside and downside. So my thesis that I've gone over in prior videos is that this downside gap will not get filled, but we might get closer to it. And in that, people will say, hey, I am going to wait for 291 to be hit, and then I'm going to load the boat. But then maybe we go down to 295, and they don't load the boat. And then we go up to fill this gap, and then they realize, oh crap, I'm being left behind. I'm gonna now FOMO in up here, and then that really launches it to go higher. So that's kind of my thesis with that. I just think, psychologically that's pretty interesting. But like looking at today's candle, just kind of bigger picture, or the daily time scale picture, we got this nice big wick up to above $4.69, which was this high that we hit on September 30th. Also, 469, just a fun number. We did hit a high today of $4.80, but we closed, like I said, at $4.58. Might not seem so great with this big wick to the upside. Does seem like it is kind of a rejection candle, but we did close above that purple downtrend. So, I still feel pretty good about it, and I don't really think that we're going to be heading down to, $3 a share, $3.50 that I've talked about before. But maybe we do see that if it's fading into the after hours, into the open tomorrow. $4.03, that was the previous low that we hit on October 10th. We do not want to see price going lower than that. But if we do, it's dip buying opportunities. We know the drill. AMC, we've been here for years. And I think that what we saw in May, I think we'll be seeing something like that again, hopefully in the near future, but it might be a little bit more time than just that. And so, hey, Ben, what's up? So for this stream, I'll follow up on other stocks on Sunday's stream just because I don't want to derail this. I'm going to release this as a video, and I just don't want to infringe on others who are just specifically interested in AMC. So I'm not going to go over other charts in this one, but as far as EV stocks go, I think that that today was a very emotional day for a lot of Americans, a lot of people around the world. Whether that's on one side or the other, a very emotional day, and you don't want to trade emotions. So I don't think people should put too much weight into what happened in the markets today. I think that a lot of things are set up to move into a Santa Claus rally into the end of the year. So for me, I've been fairly bearish, I feel like, throughout this year. I'm bullish throughout the rest of the year, and I'm not cutting anything at a loss. So I wouldn't worry about it. And that goes across all sectors, across, I feel like things are positioned pretty well. The anxiety around a 50-50 split election is behind us. We had a decisive win, one side or the other, not taking sides. And, I think the market wasn't settled because it's been, tense in the past with, one party getting the popular, one party getting the electoral. And this year, one party got both, or this elections, I should say. So I think that's... I think it's good for the market. The certainty is good for the market. But we'll have to see what the Fed does. I believe tomorrow they're making an announcement whether about rate cuts. And so I think that could be telling. But yeah, with AMC here, still that low of $4.15, consolidating here around $4.33, which was a prior low. So maybe this is a bear flag that we moved down and we're consolidating, waiting for, more info to come out before it goes lower, but maybe not. Maybe this is, the bottom is in there at 415. And so for me personally, I have been kind of tight financially the past couple months, just paid off a credit card and stuff. And so I'm a little bit more loose. And so I've been starting to get back into DCAing with AMC, and with this dip, I added a very small amount to my position. I plan on continuing to do that on a daily basis. And so, this dip, I'm happy about that. And if it goes lower, I'm happy about that too. But really, I mean, it's been years, and I like to see it going up. I think that, especially with this past quarter, with Deadpool and Wolverine, all of that, I think things are looking good. So I'm really excited about it. But let's see, got about 5 minutes, so I might go over to I might plug myself into the audio here, just so make sure that we're not missing anything. And let's see, it's probably going to be some like elevator music. And then I'll go over the earnings report very briefly, but we'll get Adam, Aaron, and all those guys going over it as well. So yep, so it's just a little bit of jazz piano, nothing too crazy. I'm just going to turn my volume up, and once that jazz piano dies down, I will connect you guys to it. Hey, what's up, Cesar? Hopefully, I'm pronouncing your name right. Caesar, the accent, Cesar. Hopefully, that's right. How's it going? I'm excited. I'm excited for earnings. I feel like this is the earnings we've been waiting for. And if we look at the chart, I mean, it sucks we went down to 415, but we're trading above 420, and we're trading above $4 a share. 410 was a prior low, I believe. If I switch over to the daily chart over here. Yeah, I mean, 403 was this more recent low, following these big moves up. So, I mean, I feel like it's going to be smooth sailing into the end of the year for not just AMC, but a lot of stocks. But if it goes down lower, then I'm happy to add more. For me personally, I just got into a position where I'm financially a little more sound, so I can add more casually than in the past couple months. So if it goes up more, I'll still, like, either way I'll be adding. So I'm just excited about it. And yeah, just got that piano going. I'm going to switch over to the 1 minute time frame. Oh, looks like it's breaking a little bit lower, 431.5 now. So a little bit below 433. But let's check out. Hey, Cesar, greetings from Portugal. Very nice. I have to say, so I went to grad school in Miami, and I knew a bunch of Brazilians there. And I don't know the Portuguese accent that well, but the Brazilian accent just it really reminds me of so many great things. So I don't know how to say much in Portuguese, actually. I think mal. I played soccer with some of them, and so like my accent, very bad pronunciation, but that would be hand. I think handball and soccer. So that's pretty much all I know in Portuguese. But yeah, welcome. And let's see, $4.30. So yeah, I mean, this might be dipping a little bit lower, and maybe we see some more dip buying opportunities, or maybe, chasing a falling knife. Who knows? I don't know. But I feel like, yeah, we've gotten some news about GameStop recently. I just think that a lot of stuff's going to be rallying into the end of the year. So I think that anything that's to the downside is really just going to be a good opportunity. Dom dia. I'm probably not pronouncing that wrong, but good day. Yeah, and hopefully it is a good day for all of us here. And so let's see. The earnings release. I'll just put a link to this PDF in the, let's see, the description of this video, so you can see some of my inner workings of YouTube Studio. So yeah, I will put the earnings release as a PDF link in the description of the stream, so you guys have access to that. But because it should be starting in 1 minute, I am going to make sure this is all set up for us to tune in. So you guys should be connected to the Chrome web browser audio, but I have it on mute because it's just jazz piano right now. Hands, and how do you say diamond hands? What's diamond? My average, so I've got two positions, one in Robinhood and one in Webull, this exchange or platform. This one, it's around 10. I managed to get it down a lot. I started adding a lot when it was around 8 about a year ago. And then I think my Robinhood one, it's a much smaller position, but I think that's around 850. And so I want to be getting both of those down in the, into the end of the year. But if it's rip your face off rally season, I might try to just wait for dips and stuff. But yeah, I get paid on Friday, so I'm excited about next week to see what happens with dips and stuff. Still just jazz piano, by the way, but I'm actually just going to refresh this in case. Press play to begin. Oh, still just jazz piano. I have done an earnings stream, and they were a minute late, and I had to refresh the page, and I ended up missing like the first 5 minutes of it. So I might actually just stay on this. Mons de Diamante. Again, probably very bad pronunciation. I know that Portuguese is like very like kind of nasally and stuff, or with the tongue, and I'm not good at that. But Mons de Diamante. Diamante. De Diamante. Cool. Nice, yeah. $10. I mean, and I think that, looking at the chart on the daily, if we look at the chart on the daily, yeah, I don't know how long it'll take, but I just see this gap up here around $43. I wonder when that's going to get filled. I imagine it will get filled. I can't imagine it will be this year since it's almost over, maybe in 2025. But yeah, it's starting, I believe, so I will connect. So I'm going to mute myself, pop a bottle of Prosecco, and enjoy some popcorn while we watch the charts and listen in. So I'll mute myself now, though. Enjoy, guys.
If anyone should require operator assistance during the conference, please press.
Oh, and I'll be in the chat if you guys want to exchange with me.
This conference is being recorded. I'll now turn the call over to John Merriweather, Vice President, Capital Markets and Investor Relations. Thank you. You may begin.
Thank you, and good afternoon, everyone. I'd like to welcome you to AMC's third quarter 2024 earnings webcast. With me this afternoon is Aron, our Chairman and CEO, and Sean Goodman, our Chief Financial Officer. Before I turn the webcast over to Adam, let me remind everyone that some of the comments made by management during this webcast may contain forward-looking statements that are based on management's current expectations. Numerous risks, uncertainties, and other factors may cause actual results to differ materially from those that might be expressed today. Many of these risks and uncertainties are discussed in our most recent public filings, including our most recently filed 10-Q and 10-K. Several of the factors that will determine the company's future results are beyond the ability of the company to control or predict. In light of the uncertainties inherent in any forward-looking statements, listeners are cautioned against relying on these statements. The company undertakes no obligation to revise or update any forward-looking statements, whether as a result of new information or future events. On this webcast, we may refer to non-GAAP financial measures, such as adjusted EBITDA, constant currency, contribution margin, among others. For a full reconciliation of our non-GAAP measures to GAAP results, please see our earnings release posted in the Investor Relations section of our website earlier this afternoon. After our prepared remarks, there will be a question and answer session. This afternoon's webcast is being recorded, and a replay will be available in the Investor Relations section of our website at amctheaters.com later today. With that, I'll turn the call over to Adam.
Thank you, John. Good afternoon, and thank you to everyone for joining us today. What a difference a quarter makes. As most of you know all too well, the industry-wide box office late last year and for several months at the start of this year was severely affected by the prolonged Hollywood strikes of 2023. Even so, when we looked ahead, knowing the movie titles that were scheduled for release, we saw better times ahead. So, earlier this year, we started saying that we all would finally get to enjoy a surge in moviegoing in the second half of 2024, and that is exactly what happened. In the third quarter of 2024, the domestic industry box office set a third quarter post-pandemic high of $2.7 billion, up 37% from the second quarter of 2024. It slightly exceeded last year's Barbenheimer-dominated third quarter and it came within 4% of the pre-pandemic domestic box office of Q3 of 2019. The box office's return to life became evident on June 14th of this year with the release of Disney Pixar's record-breaking Inside Out 2, now the highest-grossing animated film of all time, and thus far the top-grossing movie of 2024, and the fourth highest-grossing movie since 2019. The third quarter followed Inside Out 2's lead-in, fueled by blockbusters like Disney's Deadpool and Wolverine, Universal's Despicable Me 4 and Twisters, and Warner Brothers' Beetlejuice, among many other movie titles from a multitude of studios and distributors. To illustrate the magnitude of the box office improvement since June 14th of this year, let's compare the first 5.5 months of 2024 to the next 3.5 months. On a per-day basis, the domestic industry-wide box office was 82% stronger between mid-June and end September than it was in 2024 prior to June 14. And that strengthened industry-wide box office translated to strong performance by AMC Entertainment in the third quarter of 2024. Solidifying our financial metrics, our net loss in the third quarter of 2024 was narrowed by fully 37% compared to the loss in the second quarter of 2024. What's more, in this third quarter, AMC's total revenues were 31% stronger than our revenues of Q2 2024. During the third quarter of 2024, we are proud that AMC achieved a new record for our third quarter admissions revenue per patron, and we're even happier to report that we set an all-time record for any quarter ever for our food and beverage revenues per patron. AMC's adjusted EBITDA was 4 times stronger in Q3 of 24 than that of Q2 of 2024, 4 times stronger. Indeed, AMC's adjusted EBITDA posted in the third quarter of 2024 was the second best EBITDA performance of any third quarter in AMC's 104-year history, second only to last year's third quarter of 2023. It's especially encouraging that because we've worked so hard to put in place operational and financial efficiencies, that AMC realized adjusted EBITDA in this just completed third quarter that was in line with pre-pandemic Q3 of 2019, 5 years back, even though our attendance in the just completed quarter was a full 25% lower than it was in that third quarter of 2019 pre-pandemic. Of enormous importance as we look ahead for the next 2 years, looking forwards, not looking backwards, we believe that the box office will continue on its recent market rise. There's an impressive Q4 2024 movie slate about to be released into our theaters in the coming weeks, highlighted by 2 beloved blockbuster Disney storylines, Mufasa the Lion King and Moana 2. Adding to the excitement is Universal's highly anticipated film Wicked, the adaptation of the 21-year-running second most successful Broadway musical ever. Some people in the know are telling me that they think Moana 2 could eclipse and outshine even the success of Inside Out 2, and early critics' reviews of Wicked are stellar. Wicked is already being described as, quote, a masterpiece, unquote. Notwithstanding the success of Taylor Swift's record-breaking The Eras Tour concert movie, which was the top movie in last year's fourth quarter, as well as Beyonce's Renaissance film, both of which are our very own creations here at AMC, we anticipate that the Q4 2024 domestic box office will emphatically surpass last year's Q4 results. And that's just the beginning. It is AMC's belief that the 2025 domestic industry box office should easily surpass that of 2024, with bankable titles hitting our theaters next year, such as Paramount's Mission Impossible 8, Universal's Jurassic World 4, and Disney's Captain America, Snow White, The New Thunderbolts, and of course Avatar 3 as just some of the big movies coming next year. And as for 2026 can make 2025 look small. We currently believe that the domestic box office will be bigger still 2 years out. Movie theater ticket sales should continue to build, led by some truly blockbuster releases, including the next chapters of The Avengers, Star Wars, Batman, Super Mario Brothers, and Toy Story franchises lighting up our huge silver screens at AMC in the United States, Odeon in Europe, and AMC Cinemas in the Middle East. The buzz and excitement surrounding theatrically released movies over the next 2 years is nothing less than palpable. We believe that as the industry's largest player, and an increasingly efficient one at that, AMC is well poised to benefit from that highly likely increase in moviegoing. The other accomplishment of vital importance by AMC in the third quarter of 2024 was our continuing to successfully strengthen our balance sheet. As you know, in the quarter, we announced that we extended up to $2.4 billion of our long-term debt maturities from 2026 to 2029 and 2030. That is a big step forward for AMC. So, too, is that in 2024 year-to-date, we paid down some $345 million of debt and raised some $250 million gross proceeds of equity. This all translated to ending the third quarter with some $527 million of cash on hand. I have said many times that cash is king and that AMC must maintain ample cash reserves. Similarly, paying close attention to our balance sheet has been a mandatory priority at AMC Entertainment. These are among the major reasons why AMC has survived these past 4.5 years at a time, by contrast, when so many of our competitors failed. As we move forward, we will continue to take actions as needed to keep our cash reserves robust and to lessen our debt. Before I turn the call over to Sean, I've been asked by many of our retail shareholders to give you an update on our AMC Perfectly Popcorn home offerings. So here goes. We could not be more pleased with the response both from retailers and by consumers to our ready-to-eat and microwave lines of popcorn. As you'll recall, it was launched exclusively at Walmart in 2023, on Walmart.com, and at more than 2,500 Walmart stores for our ready-to-eat popcorn, and at 500 Walmart stores for our microwave corn. In 2024, this year, we successfully added Kroger, Publix, Meijer, and Amazon.com online, bringing our store count now to well more than 6,000 locations selling AMC Perfectly Popcorn. For 2025, Walmart and Kroger have advised us that they are adding our microwave line in up to 4,000 or more of their stores on top of where it was carried previously. We also added Hy-Vee and Associated Wholesale Grocers, which supplies several dozen regional and smaller grocery chains. As a result, we would expect to see AMC Perfectly Popcorn on the shelves of as many as 10,000 or more retail locations by early or mid-year 2025. That's about 4 times where it was in mid-2023. Our distribution footprint is expanding so rapidly because sales of our home cup popcorn are brisk. And it is AMC Perfectly Popcorn that is actually driving the category growth. Successfully launching a new packaged goods food product for the home is not at all an easy task. Most people who try fail. And as I just said, at AMC, we could not be more pleased about where we are only 18 months after initial product launch. With that, I'll now turn the call over to Sean Goodman, our Executive VP and Chief Financial Officer, to take you through the third quarter in more detail. And then I'll return afterwards for a very important update on our plans for a growth trajectory ahead. Sean?
Thank you, Adam, and thanks to everyone for joining us this afternoon. As Adam noted, the North American box office experienced a very strong recovery as we moved into the second half of this year. While the box office in North America exceeded the prior year's third quarter, AMC's consolidated attendance was approximately 12% below the same period last year. There were 2 factors driving this result. First, the film slate did not resonate as well in Europe as in North America. This is particularly for titles such as Deadpool and Wolverine, Twisters, and Beetlejuice. The result is that the overall theater industry in the European markets in which we operate experienced an attendance decline of approximately 16% in Q3 24 when compared to the same quarter last year, when titles such as Oppenheimer and Barbie outperformed in the European markets. Second, in our domestic business, the film slate in Q3 2024 skewed in attendance away from the major urban centers such as New York and Los Angeles, where AMC has our largest presence. This was particularly evident with titles such as Twisters, Despicable Me, and Beetlejuice, compared to the prior year, when again Oppenheimer and Barbie attendance skewed very much in favor of AMC's urban geographic footprint. As a result, our overall North American market share declined by approximately 60 basis points. This is related to the interplay between the film slate and our geographic mix. During the third quarter, we welcomed 65 million moviegoers to our theaters worldwide. This represents a sequential revenue increase of approximately 31% compared to the Hollywood strike-impacted second quarter of 2024, and resulted in an EBITDA of more than 4 times that of Q2 of 2024. A key to our post-pandemic recovery trajectory over the last few years has been the success of our profit optimization initiatives, including elevating the guest experience, optimizing the theater fleet, tightly managing expenses, and improving operating efficiency. These initiatives allowed us to achieve adjusted EBITDA in Q3 of 2024 that was in line with pre-pandemic Q3 of 2019, despite selling 25% or 22 million fewer tickets. We achieved this notable result due to record revenue per patron of $20.72, up 37.1% from pre-pandemic 2019, and contribution margin per patron of $13.49, up 41% from pre-pandemic 2019. And by the way, compared to Q3 of 2023, both revenue per patron and contribution margin per patron increased by approximately 8%. Recall that we define contribution margin per patron as total revenue, less film exhibition costs, and less food and beverage costs divided by the number of guests. This measure is indicative of the incremental profit generated per additional guest at our theaters. It is worth noting this quarter that our food and beverage initiatives led to all-time record achievements in food and beverage revenue per patron during the quarter. Consolidated food and beverage per patron hit a high of $7.53, an increase of 14.8% compared to Q3 of 2023, and an increase of 56.3% compared to Q3 of 2019. Both the domestic and the international business achieved all-time records for food and beverage per patron. In our domestic market, food and beverage revenue per patron was $8.49, 14.2% ahead of Q3 of 2023, and 58.8% ahead of Q3 of 2019. And in our international business, food and beverage revenue per patron was $5.07, 12% ahead of Q3 of 2023, and 41.5% of Q3 ahead of Q3 of 2019. Our results for the quarter reflect the continued success of our market-leading food and beverage offerings, including collectible movie-themed items, movie-themed cocktails, and menu upgrades, world-class marketing, a leading position in immersive premium large format auditoriums, and revenue diversification initiatives such as retail popcorn. All of this underscores our belief that we can achieve pre-pandemic levels of EBITDA even while the box office is not quite back to 2019 levels. Now let's move on to the balance sheet. The third quarter began with a substantive strengthening of our balance sheet. As previously announced at the beginning of the third quarter, in a collaborative agreement with both our second lien and first lien term loan lenders, we extended the maturity date of approximately $2.4 billion of debt from 2026 to 2029 and 2030. And in addition, since our last webcast, we've taken significant further actions to reduce debt and extend maturities. Specifically, one, we extended the maturity of $31 million of term loans from 2026 to 2029. And as of September 30th, all $1.9 billion of term loans that were due in 2026 are now due in 2029. Two, we reduced our second lien debt due in 2026 by approximately $128 million through buybacks and exchanges of debt for equity. Three, we reduced our senior subordinated notes due in 2025 by approximately $28 million through buybacks or exchanges of debt for equity. And four, we reduced our senior subordinated notes due in 2026 by approximately $10 million through exchanges of debt for equity. In total, since our Q2 earnings webcast, we were able to reduce our debt through these transactions by approximately $165 million using a combination of cash and approximately 14.2 million shares of common stock, bringing the total reduction in principal, debt, and finance leases to $349 million thus far in 2024 alone. And since the beginning of 2022, we've lowered the principal value of our debt and finance leases by approximately $1 billion, and we've repaid $277.3 million of deferred leases. All this for a total debt and deferred rent reduction of $1.31 billion. For now, our capital allocation priorities remain: one, liquidity; two, reducing financial leverage and strengthening the balance sheet; three, investing in our existing business; and four, investing in attractive, high-return growth initiatives. Before handing the webcast back over to Adam, a couple of quick additional points worth noting. Q3 net cash used in operating activities was $31.5 million, and we ended the quarter with cash of $527.4 million, excluding restricted cash, which was $49.7 million. Based on our box office forecast, we would expect net cash provided by operating activities to be positive in the fourth quarter. CapEx, net of landlord contributions, was $50 million, and we continue to expect net CapEx in 2024 to be in the range of $175 to $225 million. The deferred rent balance at the end of Q3 was approximately $38 million. We plan to reduce this balance by another $2 million during the fourth quarter. And from a theater portfolio perspective, during the quarter, we closed 11 underperforming locations and we opened one new location. This will bring the total number of locations closed since 2020 to 187 and the total new locations opened to 61, for a net reduction of 126 locations, or approximately 13% of our locations at December 31, 2019. And we continue to see that the 61 new locations very significantly outperform the 187 closed locations. So, in summary, the box office recovery has resumed, and our profit enhancement initiatives that are yielding record results, plus the actions that we continue to take to strengthen the balance sheet, position us very well to capitalize on what we expect will be an increasingly strong box office through the remainder of 2024 and in 2025 and beyond. And with that, I'll now hand the webcast back over to Adam.
Thank you, Sean. At AMC, our hard work, imaginative thinking, and bold actions over the past few years have allowed us to successfully manage through challenging times when others in our industry have faltered. But by definition, to survive COVID and then the 2023 Hollywood strikes, we've necessarily been on our heels much of the time and playing on the defensive. Yes, we've repeatedly taken smart and decisive action to protect the business and position our company for success as the industry recovers. But now, finally now, we can see that real success is at hand and not all that far ahead of us. With an expected multi-year rising theatrical box office in our near-term future, and with significant debt maturities having been extended far out, we are finally ready to play on the offense again with what we are calling, and will announce by press release tomorrow, AMC's Go Plan. Go. G.O. Go on offense. AMC's Go Plan is a multi-year initiative focused on strategically reinvesting in our core business to further elevate and differentiate the movie-going experience that we offer to AMC and Odeon guests. In the process, we will be striving to add mightily to our current adjusted EBITDA levels and to generate attractive returns for our shareholders as a result. Specifically, AMC's Go Plan calls for AMC to invest between $1.0 and $1.5 billion over the coming 4 to 7 years back into our theaters and into the AMC Odeon movie-going experience. Coming at a time of a likely theatrical box office resurgence, we are hopeful that in so doing, investing back in our core business, we can turbocharge our financial results in the quarters and years ahead. Of course, it goes without saying that we will implement AMC's Go Plan only as we successfully manage our debt reserves, our debt levels, our liquidity, our cash reserves, and our leverage. With AMC's Go Plan, we will be providing our guests with an ever greater selection of premium experiences, immersive sight and sound enhancements, more comfortable seating, and upgraded theaters, as well as other initiatives, including upgrading our IT systems and considering how the smart use of AI can improve AMC's bottom line. Some of the components of AMC's Go Plan are already being implemented now, and others will be implemented over time, but only as and when our financial resources prudently allow. So let's talk some more about just some of the key components of AMC's Go plan. Here are three in ascending order of importance. First, laser projection. As you know, we previously announced an agreement with Cineonic to launch our first major broad-scale projector upgrade since the transition to digital film decades ago by now installing Barco laser projectors broadly throughout AMC auditoriums. This project is currently well underway, and as we sit here right now today, we currently have some 2,137 screens in the United States now equipped with and marketed as laser at AMC. No surprise, guests are reacting extremely positively to the brighter images, more vivid colors, and consistently sharp image quality associated with laser projection. Dimming and lamp degradation are a thing of the past in these auditoriums. And this is a major greening of AMC as well, which also plays well with consumers because laser projection is considerably more environmentally friendly than its predecessor projection technologies. In the time frame of AMC's Go plan, it would be our hope to at least double and maybe even triple our current number of laser and AMC equipped auditoriums. Second in the plan is theater renovation and upgrading seating efforts. For over a decade, AMC has led the way in this industry in introducing a bit of luxury for the masses through the upgrades and renovations at our theaters. Our signature recliner seats have often driven instant and dramatic financial returns. AMC's Go plan will allow us to continue to invest in some of our best and most productive theaters where, in our view, renovation would cause significant increases in their theater-level EBITDA and or prevent erosion in our operating cash flows when competitors try to claim the moviegoers who are currently ours. In recent years, as Sean just mentioned, we have not been shy, to the contrary, been quite aggressive, in opening shiny new theaters in superb locations geographically and in closing tired older theaters where it would be unwise for us to reinvest. That strategy of pruning our fleet by eliminating weak theaters and adding profitable new ones will continue. And some of that will be funded by AMC's Go plan. But AMC's Go plan also will allow us to make important, what we think of as almost sure bet investments in some of our absolute best and most productive theaters, where in our view renovation would cause significant improvements to our already quite solid financial results. The caveat, of course, in saying it's an almost sure bet is that nothing in life is certain, but there is opportunity in life that is often worth grabbing. Right now, for example, we've been putting in new, wider, and much more comfortable plush rocker seats with a feel of leather at 3 theaters which routinely rank among the 5 highest grossing AMC theaters in the entire United States currently. We started at our flagship theater, Burbank 16 in Los Angeles, which received this major seating upgrade last year. Our guest scores went up markedly. Based on that success, since Labor Day of this year, we're in the process now of doing so at our 2 most successful New York City theaters in Manhattan, at AMC Lincoln Square 13 and at AMC Empire 25. Over 4,000 aged and tired fabric chairs in Manhattan are being replaced with plush deluxe rockers, offering guests between 12% and 23% wider seats. These significantly upgraded seats are visually stunning and physically much more comfortable. As part of the seating renovation at Lincoln Square, our new seats in most auditoriums also will feature 10 inches of additional legroom from the current 38 inches instead to 48 inches of legroom between rows in 8 of our 13 Lincoln Square auditoriums. That will mean that AMC will offer legroom of 4 feet for your 2 legs. How's that for a slogan? Making for a much more enjoyable viewing experience, and we believe that will open the door to even higher profitability at that already very successful theater for AMC. The upgrade at Lincoln Square will be completed this month before Thanksgiving. We expect to complete much of the Empire 25 seating upgrades before the rush of the holiday movies around Christmas, with the entire renovation of Empire 25 being finished during Q1 of 2025. Beyond just these 3 theaters, we have a prioritized long list of high-performing AMC theaters that could receive significant seating and other upgrades as part of AMC's Go plan, which in our view will make those theaters even more successful, even more profitable. As a third and extremely important element to AMC's Go plan, premium large formats, or PLFs, and extra large formats, or XLF screens. AMC already benefits from having the most premium large format screens of any movie theater chain in the world. In the United States, for example, AMC single-handedly represents just under half of all of IMAX's U.S. screens and 100% of all of Dolby Cinema branded U.S. screens. We also have 31 Prime and AMC screens in the U.S. That's our house brand here domestically. Some 423 PLF screens in total, including IMAX, Dolby Cinema, and our 82 iSense. Those are our house brand PLFs in Europe. We now have some 566 PLF screens globally. No one else comes close. From our patronage data, we know with certainty that moviegoers increasingly seek out our premium large format screens. On average, our PLF screens in the U.S., for example, do about quadruple the revenues of our non-PLF houses. You all know the saying, fish where the fish are. Moviegoers clearly want PLFs, and through AMC's Go plan, we have every expectation of improving the quality and increasing the number of our PLF auditoriums. Under the auspices of AMC's Go plan, we would expect to continue to increase the number of our IMAX auditoriums, but more importantly, we intend to upgrade many to IMAX's latest technology. Not so long ago, only 42 of our 223 IMAX theaters offered the superb IMAX with Laser product, including laser projections and its enhanced 12-channel sound system, along with significant recliner or plush rocker seating upgrades. We are optimistic that AMC's Go plan will enable us going forward to have IMAX with Laser installed in more than 2/3 of our IMAX deployments. We are also proud of our success, our clear success, in establishing the Dolby Cinema PLF brand in the United States. As a result of AMC's Go plan, we would expect to increase the number of our Dolby Cinema locations in the U.S. by 25%, bringing our total globally up to about 214. As envisioned in AMC's Go plan, we further expect to more than triple the number of our Prime and AMC auditoriums, Prime being our U.S. house brand PLFs, from the current 31 to what we hope will get up to about 100. We indeed hope to have 100 of these wonderful offerings in which no royalty has to be paid to a third party, I might add, installed in our theaters over the next several years. Beyond our so-called PLFs, also in another press release that will be issued tomorrow, we will unveil a new auditorium product that I don't think any of you have heard about yet, called XL at AMC. XL stands for extra large screens and will be yet another AMC innovation and one of the many premium experiences that AMC will offer to our guests. It is modeled after something that we've been testing and piloting in Europe over the last year, where over the past 12 months, we've quietly but successfully introduced some 68 XL screens across Europe. XL, or XL at AMC, lets us brand and leverage other offerings currently in place or envisioned for Odeon and for AMC. For example, here in the United States, we already have extra large screens in place at almost all of our theaters presently, but they've never been marketed as such. Now, we're just not living on the laurels that we have large screens. We're combining some of these larger screens with a new laser projection that has been or will be deployed in our theaters. Specifically, the brand standards for XL at AMC here in the United States will include screens that are sized only 40 feet or wider. What's more, in our new XL product, we will specially offer another upgrade in immersive sight and sound, the latest 4K laser projection technology. Thanks to AMC's Go Plan, we anticipate rolling out approximately 50 to 100 XL and AMC screens in the United States within calendar year 2025, with the potential to grow the total number of XL and AMC screens in the United States to between 200 and 250 screens over time, in addition to our XL screen count in Europe. With the introduction of AMC XL, we will specifically identify the largest screen or screens in a theater, equip them with the best in 4K laser projection, and through XL and AMC branding, arm our guests with the knowledge to select their auditorium of choice when reserving their seats. In Europe, we are currently charging an extra euro or an extra pound for our XL screens. We've not yet decided whether it's smarter to charge an extra dollar here in the United States, or instead to keep our current pricing as is, and instead generate our financial returns from the added patronage that will come our way, thanks to offering a clearly superior and guest-pleasing consumer offering. Take all this together, adding IMAX screens, upgrading our current IMAX screens to IMAX with laser, increasing the counts of Dolby Cinema and Prime screens, and introducing XL at AMC, and introducing XL in Europe. AMC's Go Plan features as its hallmark a significant commitment to building upon AMC's now massive competitive lead in PLF moviegoing. It's our view that these investments in premium auditoriums are an ambitious and an aggressive step, and indeed going on offense. They have the likelihood of generating attractive shareholder returns for our much-deserving retail shareholder base and those institutional investors who care to join them. That's so given their popularity of premium screens, not only with moviegoers, but also with movie studios who tell us constantly that they recognize and seek out the unparalleled audience experiences and creative opportunities that AMC offers through our premium screens at AMC theaters. Two final thoughts about AMC's Go Plan. First, it does not pertain exclusively to our domestic theaters. Our Odeon team in Europe is excited about the opportunity to roll out internationally as well. where industry PLF screen density is lower than that of the United States, and a differentiated experience, as evidenced in our PLFs, resonates with consumers extremely well. Similarly, in terms of theater renovation in Europe and the introduction of new theaters into our fleet, we've already identified opportunities to add theaters or to develop a meaningful number of additional Lux cinemas, especially in the United Kingdom. Our Lux theaters heretofore introduced in Europe have been quite a successful innovation by AMC. These theaters, as you know, boast of upgraded amenities, including reclining seats, premium auditoriums, handsome theater lobbies, and enhanced bars and concession areas. Audiences have been keen on our Lux cinema experience in Europe, and happily for us, theater landlords, eager to drive footfall to their developments, often have been quite willing to provide a substantial portion of the required capital investment, resulting in healthy financial returns for AMC. The second thing that I want to stress about our Go plan is that we will carefully marry our going on offense plan with respect to added capital investments with our financial ability to do so. We can either go fast or go slow. We said 4 years to 7 years, but we will not get ahead of our skis. As we see it today, substantially heightened CapEx levels will only occur with rising EBITDA or a sense within our shareholder base that it is wise to increase the pace of equity raising, not just to maintain our cash reserves or manage our debt load, but also for the purpose of increased capital expenditures specifically aimed at accelerating our growth. Thank you for listening today. Life's not all rosy. We had a good quarter, but we still have challenges to navigate. Most obviously, adjusted EBITDA in calendar year 2024 is expected to be but a fraction of where it was in 2019 pre-pandemic, and we are well aware that it is not yet where we will need to get it to be. But even so, the quick synopsis of this call is fourfold. One, the third quarter was a success at AMC. Two, we have been smartly managing our cash levels and are determined to keep our cash reserves robust, just at the same time as we've been actively addressing the amount and timing of our debt obligations. Three, a rising box office fills us with optimism for the remainder of 2024, 2025, and 2026. And four, we have a plan and are committed to going on offense again. Looked at as a whole, assuming we continue to do all the right things in managing this company, in making sure that our liquidity and leverage is well managed, that our business is operating efficiently, and that we produce rising EBITDA in the years ahead, we could not be more confident about the future for AMC. Sean, that concludes my remarks. Let's open up the webcast for questions both from our retail shareholders and from our equity research analysts.
Thanks, Adam. So we have questions from the retail shareholders, and I'll ask just a few of those, and then we'll pause and see if there's any questions from the equity research analysts. Starting with questions from our retail shareholders, the first one relates to the loyalty programs, our AMC loyalty programs. And the question is really, are there plans in place to enhance or change these loyalty programs at AMC in the future?
I am actually very glad you asked that question because, as you know, I'm a marketing guy by training, and I'm so proud of what AMC has done in the area of loyalty. We have three major programs that have massive enrollments, and each of the three is vital to our success. A couple of years ago, we launched something called AMC Investor Connect. It was a free program for our retail shareholders to join that would get them frequent benefits at AMC, including the occasional free this and free that. Normally they're buying a movie ticket when they're there, which is a good thing too, right? We have 1.4 million members of that program. We're communicating to them almost on a monthly basis. We're coming out with significant offers to them 4 to 6 times a year. This is a group that has been very loyal to AMC, and in fact, we track their patronage because they also were enrolled in AMC Stubs, our frequent moviegoer program, so we could see what movie tickets they were buying. And our AMC Investor Connect population, 1.4 million strong, is about twice as loyal to AMC as our regular AMC Insider Stubs members, and like infinitely more loyal to AMC than the great population as a whole who are not in our loyalty program. Then that's program one. Program two is AMC Stubs, which is our play for points movie theater equivalent of a frequent flyer program. Over the years, we've enrolled, I think it's 34 million households, U.S. households, in AMC Stubs. It was only 2.5 million households when I joined the company 9 years ago. This has been a massive area of increase for AMC. Back when I joined AMC, about 19% of our guests were playing for points through AMC Stubs. In the third quarter, and in fact for the latest 12 months ending September 30, 48% of our guest tickets are purchased by members of the AMC Stubs program. And it's not just that we've got a lot of consumers intrigued with playing our game. It's so important for us because, remember, we know the movie ticket buying habits of the members of our AMC Stubs program. So if you went to see Mission Impossible 7 last year, guess who's going to get a lot of marketing to see Mission Impossible 8 in 2025? If you show up as a Stubs member to see Wicked 2 weeks from now, guess who's going to get a reminder next Thanksgiving when Wicked Part 2 comes out? We actively market through email, push notification, and text literally billions of times a year to the members of our Stubs program. It's an immensely important and successful program for us. And then the third program, which actually is a subset of AMC Stubs, is AMC Stubs A-List, our subscription program, where under current rules, for somewhere between $20 and $25 a month, you get to see up to 3 movies a week. You may recall the pandemic just gutted AMC A-List. We had to pause the program for a couple of years because there's no point in having a subscription program when movie theaters are closed for months on end or when there are very few movie titles coming out. Fortunately, since we reopened our theaters and restarted AMC Stubs, we've seen a dramatic increase in the number of members. And I believe the count that I last saw was up about 2/3 in terms of AMC List active paying current members today as contrasted with the number we started with coming out of the pandemic pause. The only other reason I'm just so excited to talk about Stubs and A-List endlessly is because I don't want to announce it today, I don't want to announce it tomorrow, I don't want to announce any other things, but I can tease this audience to tell you we have some significant enhancements coming, both to the Stubs program and the A-List program in 2025. We've been working on this for almost a year. We did a lot of market research in 2024. We test marketed some of these things in a few cities. We're confident they're going to work. We're confident they're going to drive significant improvements to our bottom line and make both the A-List and the Stubs programs all that more appealing to their members. So watch this space for important Stubs and A-List announcements for 2025.
It's exciting stuff. And the next question here is about investment spend. Can you talk more about the financing and timing of investments that we plan to make in the future?
Sure. For the past several years, we've been investing about $200 million a year in CapEx. What we've announced with the AMC Go plan is that we're going to invest in CapEx in our fleet of theaters somewhere between $1 billion and $1.5 billion over the next 4 to 7 years. Now, at the slowest, that's a little bit more than $200 million a year. At the fastest, it's $375 million a year. We'll decide how much we're spending in the future years only by applying the fiscal discipline that you've practiced as our CFO and I've talked about on this call already. We've got to marry our spending with either rising EBITDA, which could fund increased spending, or alternatively, if our shareholders were to tell us that they think it's smart of us to increase capital expenditure spending, specifically with the purpose in mind of accelerating growth. So the exact timing and speed is something that we'll decide over the course of the next several years. But as we outlined on the call today, we have a lot of very specific ideas of opportunity in the company that could turbocharge our EBITDA returns.
Thanks, Adam. And Diego, let's pause with the retail investor questions and see if there are any questions from equity research analysts.
Thank you. And those on the phone to ask a question, press star 1 to queue up for a question, and press star 2 to remove yourself from the queue. Once again, to queue up, press star 1 on your telephone keypad. Our first question comes from Jim Goss with Barrington Research. Please go ahead.
Okay, thank you. Adam, I know you are all about the creative use of your platform. I was wondering if you might talk a little about AMC's participation in the effort by IMAX, since you're its biggest partner, to exhibit the Penn State-Washington football game on live on selected IMAX screens. And sort of on a related basis, is there any likelihood you might try to initiate a similar program since you would arguably have greater available screen capacity? I assume rights issues are the primary obstacle, and the level of interest in specific games tend to be very localized. But how do you approach this opportunity? How do you size it? And maybe this new emphasis on the XL screens might tie into this.
Thanks for the question, Jim, and hope you're well. I spoke with Rich Gelfond, the CEO of IMAX, as recently as yesterday about their Penn State-Washington initiative. We've long been in IMAX's corner. We represent, as I said, almost half of the total U.S. IMAX screens in the United States, provided they can get a suitable window, an exclusive theatrical window. We're willing to do just about anything with IMAX, and I'm optimistic that IMAX can do some interesting things, not just related to Penn State, Washington, but other things as well. And I've got a lot of confidence in Rich to make good things happen for IMAX, which in turn makes good things happen for AMC. If he brings us the Penn State, Washington game, we will play it, of course. That triggers the whole question about sports and sports rights. I've long believed that sports programming is an extremely attractive alternate programming opportunity for AMC. You'll recall that for 2 seasons, we carried NFL games, but we did so under some quirky rights given to us by DirecTV. We couldn't ever mention the word NFL. We couldn't ever mention a team name because those were proprietary trademarks of the league and the clubs. And we could only carry the wrong games, which are out-of-market games. Like here in Kansas City, they only want to watch the Chiefs. Where you are in Chicago, they want to watch the Bears. Like, I'm sure the Jacksonville-Seattle game is a great game, but the games that we ought to be playing are home games, and we ought to do it in full cooperation with the NFL not going around them. There are some things we are willing to experiment with, even in football. We've been quite intrigued about carrying nationally broadcast games, whether that's the Thursday night games or the Saturday night games or the Sunday night games or the Monday night games or the playoff games. We don't have those rights yet, but we will continue to work with those entities that can get us those rights. And when we succeed, we'll be very happy, and we'll test it and we'll bring it out and see what happens. I think you mentioned college football. We've long thought that while the teams may have regional appeal, there are a lot of teams with a lot of regional appeal in a lot of regions. So I will hope that we'll also continue to introduce conversation with collegiate sports to see what kind of collegiate sports we can carry. Obviously, it would be different collegiate teams that we're following in different cities around the country. We had good success with things like UFC and others, things that we tried a couple of summers ago. I'm sure we're going to try to bring some of those opportunities back in the system. So that's a long answer question. The short answer question is, yeah, I think there's real promise in alternate content. The key is getting the rights to the correct events, and we're in active dialogue with a lot of sports leagues to see what we can get our hands on at AMC.
Okay, thank you. And one other one, if I might. The franchise-heavy film release slate should support some assurances of continued recovery. I was wondering, though, if you can discuss the role of the smaller films relative to norms and the impact of gaining those films and concentration and film rent splits, and also the interplay with streaming options for these smaller films versus theatrical releases.
I'm glad you limited your follow-up to one question, because there was two questions, there were like 9 questions in there.
Okay.
I'll just try to give you a general answer. No, you do it well. I'll just try to give you a general answer to the whole thing. When we do our forecasts around here for the size of the box office, we literally do it on a title-by-title basis. And in year, that film forecast is updated on a weekly basis. I mean, it's circulated on a weekly basis. It's upgraded by our programming staff on a daily basis. And so we're tracking not only the blockbuster movie titles, but also the smaller and mid-sized titles. And yes, we're thrilled beyond thrilled that there are so many blockbuster franchises coming in 25 and 2026. But there are also a lot of medium and smaller sized movies coming. And we need them all. We can't just survive on the blockbusters. It's like we need the blockbusters, but we also need the medium and smaller sized movies. And in our conversations with major Hollywood studios, one thing we're most encouraged about is so many studios are trying to increase the number of movies that they release now as compared with what they were releasing a year or 2 or 3 years ago. And you had, I don't want to name studios, but you had some studios that were producing 25 films, or we're down to 10 or 12. And we talked to one major studio just 2 weeks ago who said their aspiration for calendar year 25 was to release 38 movies. Now, whether they actually can release that's a lot of movies, by the way. Whether they can actually release 38, there's no commitment. But what I'm comforted by is the fact that each and every studio that we talk to wants to issue more products. And some of that's the big, massive products, like Avatar 3 and the latest Star Wars movie and the latest Avengers movie. We're happy about that. But we're also happy with the medium and smaller sized movies. And as you rightly pointed out, our film rents, we don't really disclose the terms of our deals with each studio, but it's well known that the bigger the movie, often we pay a higher gross split. to a major studio, which means that we get to keep more of the smaller and medium film box office grosses, and that's helpful to us as well. So on balance, as we look at 2020, the remainder of 2024, all of 25 and all of 26, there are a lot of big blockbusters coming. We know the studios want to release more and more titles, including medium and smaller size ones, and that all bodes very well for the recovery of our industry broadly, but of AMC specifically.
All right. Well, thanks very much. I'll stop there.
Thank you. And we have time for one more question, and that question comes from Alicia Reese with Wedbush Securities. Please state your question.
Hi, thanks. Thanks for taking my question, guys. Jim asked one of my questions, thankfully, but I do have a couple others. Wondering if you could just give some maybe puts and takes on the concession costs. It looks like that was quite a bit lower domestically than it has been trending recently. Perhaps there were some one-time items, perhaps some easing of commodity costs in the domestic region. Wondering if you could give your take on the quarter and what to expect going forward on that line item.
Let me pass that one to Sean.
Sure. Thanks, Alicia. Hope you're doing well. With respect to the food and beverage costs, when you compare it to quarters when our attendance and revenue is lower, we do get a benefit, right, on food and beverage costs when attendance is higher. Why is that? Because you have less spoilage and less shrinkage as a percentage of the total volume of food and beverage sold. So that's one factor to take into account. The other factor to take into account is, yes, there have been price increases, particularly in commodities like cocoa. But at the same time, we have a very focused and successful procurement team that has done a lot of work in terms of looking at the mix of products, the supplies of different products, etc. And that has helped our food and beverage costs. And we do get rebates, and you see some of the impact of rebates coming through the numbers in Q3. That certainly helps our food and beverage costs as well. So going forward, if I look out for the remainder of the year, which is basically Q4, right, I think that food and beverage costs should be pretty much in line with what we were able to achieve in the third quarter.
And let me just chime in. It's a small numbers, but when you go to margins and percentages, including our food and beverage numbers, are the merchandise that we sell at our concession stands. And this has been a massive success for AMC. 3 years ago, our merchandise sales were precisely $0. And in calendar year 2024, it's going to be about $50 million. And I think in calendar year 25, somewhere between $50 and $75 million. Maybe we can even do $75 million next year. But our profit margins on merchandise are more like 50%, whereas our profit margins on other food and beverages are in the low 80s. So, mind you, a 50% profit margin is nothing to sneer at. We'll happily take as much of that as we can get. But that's just one more thing in your list of modeling.
And I think that's an important point, Adam, because despite that, because the merchandise and collectible concession vehicles were up significantly in Q3 24 versus Q3 23, like close to 200%, that does put pressure on your food and beverage costs, exactly as you said. Despite that, our food and beverage costs are still lower, which gives you an indication of the success we're having in managing those costs.
That makes a lot of sense. Thanks for explaining that. And then lastly, the other revenue, obviously there's so many things in there, and with the popcorn expanding early to mid-year next year, just taking that into consideration alongside, Q4 23 when you had Taylor Swift, that added quite a bit in there, I think, for distributing that. Just wondering if you could give us some sense of where you expect that to track on a per cap basis, maybe around $182 on a normalized basis, perhaps, once you get the full distribution of popcorn into stores.
Good luck. I just want to say I'm glad I'm not taking that question. Good luck, Sean. Go ahead.
No, look, that's absolutely right. Included other revenue is the retail popcorn sales. So you would expect, and the retail popcorn sales have grown significantly when you look at the quarter-over-quarter, not year-over-year, right, comparison, Q3 24 versus Q3 2023. So, that impacts your revenue per patron. And I think when you look at Q4 and you look at the following year, well, what's going to happen is the retail revenue sales probably in Q3 and Q4 are going to be relatively similar, but because Q4 is likely to be higher attendance, likely to be higher box office, the impact is going to be less. Looking out to 2025, you should continue to see that revenue per patron, that other revenue per patron increase, but probably more towards the second half of 2025 as retail popcorn does increase a little bit.
Thank you. Really appreciate that detailed answer.
Before we end you're welcome, of course. Before we end the call, I know it's late and there's like a lot of election news that people want to continue to go back and pay attention to. Let's take one last question from our retail shareholders before we end the call.
Thanks, Adam. And so the last question that I will read out here from our retail shareholders relates to the box office. And the question is really, when do we expect the industry box office to reach a steady state and return to the traditional pre-pandemic industry growth rates?
So, I think the answer to that question is almost the whole saga of this earnings call combined with Jim Goss's question. It's been a long time in coming. The pandemic knocked the industry box office down 80%. And we've been on a build sort of straight up since 2021, but it's been a slow build, and the pace of that growth was knocked off to the side by the Hollywood strikes of 2023. But as we look ahead, we'll all know on December 31 where this year ends up, but should be close to around $9 billion. It may be more, it may be less, but closer to 9 than to 8. As we look ahead to 2025, it's going to be a lot bigger than that. As we look to 2026, we think it's going to be a lot bigger than that. It'd be a nice thought to think that the industry box office in 2026 could get near to pre-pandemic levels. I don't know that it's going to go all the way up to $11.5 billion in 2026. But an important point for everyone to remember is that AMC does not need the box office to return to pre-pandemic levels to outproduce pre-pandemic levels of EBITDA because of the operational and financial efficiencies that we've achieved in this company over the past several years. Just look at this year. The attendance in Q3 was 25% down from the third quarter of 2019 pre-pandemic, and yet our EBITDA was in line with the pre-pandemic level of EBITDA in the third quarter. So our whatever you want to call it, our contribution per patron, our profit per patron, there are a lot of phrases you could use to describe it, but the amount of money we make from each body coming into our theaters is a lot more today than it was a few years ago. And so we don't need the box office to return to historic levels at the top line of revenue or of ticket revenue, let's say, to outshine our former performance at the bottom line, which is, of course, where the whole story is written. So I'd say everybody should be very excited about 25, 26, and 27. And the box office looks good enough to us for us to be a quite successful company in 25 and even more so again in 26. With that, I think we're going to end the call. What a good quarter. We have an exciting plan going forward. We're going to put out a press release tomorrow that will give you a little bit more information about AMC's Go plan. We're similarly going to put out a press release tomorrow that will give you a little more description about XL at AMC, which we are quite excited about. As I said, we think we can get it up to 200 to 250 screens in the United States, in addition to the current 68 that we already have in Europe. Thank you for joining us, everybody. We will talk to you again 90 days from now.
Thank you. And this concludes today's call. All parties may disconnect. Have a good day.
Hey, all right, I muted it on the computer as well as the mic over here, but yeah, should be good for me now. And yeah, it just froze a little bit for me, the screen, so hopefully it's still good. But yeah, I'll just kind of wrap up what's on the chart, and then I'll close this down, and then I'm probably going to release this stream as a video with timestamps. For whatever reason, whenever I do a stream, it takes YouTube like 24 hours to put ads in it, and then it's not really rewarding for me in that sense. And so I'll probably re-release this as a video. But yeah, before I do that, I will go over the chart here. And so, yeah, I mean, and I guess I should share some thoughts on what was said. Personally, I'm not the best at staying focused on, everything Adam, Aron, and Sean, all of them are saying. So the things that stand out to me, I wasn't taking notes or anything. But, basically we're just continuing to make improvements to the theaters. We're expanding them, improving the experience of participants, of viewers, of moviegoers, and doing that in a smart way by closing down the unsuccessful theaters and making improvements to the good ones, opening up new ones that should be better. And it seems like there's a lot of great plans moving forward with that. And also those plans take into consideration that, things change. And so I believe the plan for the XL theaters is 4 to 7 years. So, that gives them some wiggle room. So if maybe we're able to pay off some debt sooner rather than later, and we get that done, maybe that accelerates the timeline for improving theaters, or maybe it takes a little bit of time before we can pay off some of that debt, and so we string it along over the course of the next 7 years. And so I feel like with the question on, the retail question, when will AMC, kind of be, level again? And, I feel like the 4 to 7 years is kind of a timeline for that. And so, we've been, depending on, when you first got exposed to AMC and investing in them, we've been here for years now, about 3-4 years now. And so it might be, this might be a halfway mark or a third mark in, AMC having a balance sheet of zero debt, better improved theaters. And I think one of the things that's important to take away from improving theaters is they're not something that's improved every few years. You improve. It's like, when you buy a couch, how often do you buy a couch? Do you buy a couch every year, maybe every decade? And so these investments that AMC is making are investments that will last, a decade plus. And so we want to make sure that those investments are good. We want to make sure that they're in locations that do make it worthwhile. And also the revenue that the theaters are bringing in is not just focused on, more people. It's focused on better experience. And so whether that's with better concessions, better merchandise, whether that's a popcorn bucket or a hoodie, whether that is the screen, the size of the theater, the quality of the seats, AMC is focused on the right things as far as those things go. So I think that's really good. And also AMC is continuing to expand the retail popcorn, which, for me, I don't know about you guys. I mean, I got into AMC when I was actually living in Canada, and then I was I was in British Columbia. I was hoping to live in Seattle, but it just didn't make sense. There were AMC's there. I now live back in the Midwest in Iowa, and there are no AMC's immediately around where I'm at. Occasionally, I do venture out to an AMC, but a way to participate in AMC is through their retail stuff, whether that's popcorn or merchandise, stuff like that. And the only way I've been able to get, the AMC popcorn, I usually, personally, I prefer the lightly salted, but because, I'm just pumped, I went with the extra butter for this one. I had to drive out to Walmart to get that. And my local grocery store, which Ashton Kutcher used to work at, Hy-Vee, so maybe you guys know it because of him. Hy-Vee, I just walk through a park pretty much every few days to grab groceries. I'm not a buy in bulk grocery store kind of guy. I do it every few days. And they're going to start carrying AMC popcorn next year. So I'm really excited about that for myself personally. That impacts me in my life, really probably on a weekly to monthly basis. And so I'm excited about that. I'm also excited about, sharing that with people locally and being able to talk about it because, going out to Walmart is kind of a removed experience, whereas, going to your local grocery chain is something that everybody does, on a weekly, if not more than that, basis. And so I look forward to participating in that and, sharing the joy that I have with, getting my popcorn, friends, family, participating in that. So I'm really excited about that. But anyways, I just think that AMC is really positioned, where like the bottom is in and or near. And with us in the after hours trading, I'll first talk about that, then I'll talk about big picture on the daily time scale, which I'll elaborate more on likely on Friday, and then also with the options video on Saturday. But for the after hours trading, initially, I was disappointed by this drop to 415, and everybody does this differently, so I'm not trying to suggest what others do. For me personally, in my financial situation, I just paid off a credit card, no longer have credit card debt, so that has kind of broken the chains that I had, and so I have been telling myself, I can buy the dip with AMC. I could buy the dip with AMC. Nope, I got to pay off that debt. So I just broke those chains. I get paid on Friday. And this week, basically on Sunday, I develop like kind of a trading plan for myself each week. And I was like, well, I can't really go too crazy with AMC or anything until I start getting paid. Even going crazy for me is not that crazy. I'm a little fish. I say that all the time. But for this week, it's, well, what can I do sustainably every day of the week? Dollar cost averaging, which is something that's really worked well for me with Dogecoin, with Bitcoin. I feel like I got thrown into those, like a lot of us, I imagine, in 2020, 2021. I actually was introduced to Bitcoin in 2017, but it wasn't like a way of like managing those kind of moves. And, more recently, I've, recognized, look, I want to participate in these things, but I can't be like YOLO type stuff. And over the past year, I've been dollar cost averaging into Doge and Bitcoin positions, a few other coins. And it's just like I have no emotions right now as Bitcoin's hitting all-time highs, as Dogecoin looks like it's breaking out and likely going to be heading towards $1 at some point, whether that's this year or next. And that's basically my thesis there. My thesis was that with AMC is it's going to go a lot higher, but if it's going to be, maybe I'll start with a daily analysis, before I jump into this ramble, maybe I'll just go over the 1 minute real quick. I am encouraged that it's holding around 430, 433. I'll take a step back in just 1 second. That was a prior low. We dipped below 420. I feel like 420 is always a fun dip buying level. We're above it right now. Maybe we do dip to 420 and maybe we can experience that fun again. Maybe not though. Maybe 410 gets retested. Maybe we get into the threes. I don't know. But for me, it's like looking back on the daily time frame, we can see this 430, that was the 433, that was the low from June 25th 410. That was the low from May 31st. And, we kind of tested those levels effectively, going down to 415 in the after hours today. And so, I'm wondering, are we going to be holding 433 tomorrow and into the close of the week? Might we be dipping down to 410 or maybe even 403 or below? How do I want to manage that? This is, for me personally, I feel like my experience with crypto over the past year has been really helpful. And just like, I want to be adding. I don't know if I'm going to be buying the dip, but I want to be adding. And so, like, I view Bitcoin as like a retirement fund, whereas I view Doge as more of something that once it hits $1 or once it gets in that range, I plan on trimming, but I still plan on holding for the long term. And so I feel like, that's kind of like a mix with AMC in that, I believe in this long term and I want to be here long term, but at the same time, it's tough to hold for so long, especially when the price is suppressed so much. And so, I feel like a really great way to be adding, especially when we're just in like such a boring range. You can think of this as between 4 and 6, which is effectively the low, that we hit on May 31st, or the high that we hit on June 6th, which was $5.96, right around $6. So we've effectively been in this range from $4 to $6 for half of this year. More than half of this year, or about half of this year at this point. But then we also have this other wider range with these two gaps, one being at 291 and the other being at 685. And so for me, it's like, well, I don't really care. I like the stock. And especially if it's between this broader range, I want to treat this like I've been treating Bitcoin, like I've been treating Doge, just like an emotion-free daily dollar cost average. And so I started doing that on Monday with just like, what's sustainable for me this week until I get paid on Friday. And then starting next week, what's sustainable for me for the next 2 weeks before I get that next paycheck and then reevaluate whatever. And so, yeah, I feel like whatever the price action's doing with AMC right now, for me personally at least, I've been disciplined. I feel like I've been trying to be responsible about stuff. Yeah, Sandy, no problem. I hope you enjoyed. If you're taking off, the last few minutes of whatever video I put out will be the continuation of this rambling. But yeah, thank you for joining. I really appreciate it. And I will be doing an update on Friday after I get off work. So it might be a little bit late, but I'll definitely be doing it then. So thanks for joining. But yeah, I just like, and I don't know. This is just, like, I feel like for me, I don't know, AMC, like going back, I think 2021, I was really, oh, cool. Well, you'll enjoy the continuation of the rambling. But like in 2021, I was like really disheartened by what happened. But then I think the thing that kind of turned me back on was when Trades, which I'm sure some of you have mixed feelings about him. I feel like he's a good guy, so I don't have any resentment for him. Other people like Matt Kors, not such a fan of. But Trades, I think he's a great guy. And he was interviewing the Wolf of Wall Street. I later heard that he paid him, $10,000 to have Jordan Belfort on for an hour or whatever it was. And I initially was laughing at that, like, this sucker, all this stuff. But then I watched it and it's just like, well, maybe this is it, maybe. And then I didn't know how to handle the squeeze at the beginning, or I should say maybe the sneeze, because Richard Newton, I don't know if you guys follow him, he does the daily GameStop videos. He always says sneeze. I think maybe that's a keyword I should be using instead. But at the beginning of 2021, I didn't know how to handle that. And then later in the year, I didn't know how to handle that. Yeah, so it's saying everybody has mixed feelings about him, or people have maybe polarizing feelings about him. Yeah, because I did mention Trey and Matt. So I feel like I would appreciate your sentiment if you said both. I would agree with you if you said Matt. But yeah, I mean, I feel like I mean, my channel is really small, so I'm not in in as deep as those guys or anything. But I just feel like I was basically at a point where it's like, okay, I made a bunch of investing decisions and they're probably all bad. But because of this community around AMC, I'm going to hold that. Like I was very bullish at both. Yeah, I mean, I can totally see it. Um, it's yeah. And yeah. And also though, I wonder if it's they got so big they Matt Kors, I think I 100% agree with you. I think he's um not doesn't have good intentions. I wonder if Trey got too close to the sun and he basically maybe had financial threats or something. I'm not sure, being too close to Wall Street or whatever. And I have no idea. There's so many nefarious things that go on with Wall Street. I have no idea. Um, but let's see, what was I gonna say? I mean, like just like the AMC community. Oh, I was gonna say something about Palantir. I was very bullish on Palantir, and I was holding for a long term. I believe in it. All this stuff, and the one thing that kept me in investing, kept me wanting to be a better trader, was AMC because of the community. It wasn't as strong with Palantir. It wasn't, and with Palantir being an AI play, a very different sector than AMC. I feel like fundamentally you can argue that that's a much better play, but perhaps more risky because it's a newer company and stuff. It's new territory, whereas AMC is kind of a legacy territory. It's we always go to I mean, one of the things that I've really appreciated is going to the movies. I go to the movies by myself, and I find that I enjoy them more that way. And it's like I feel like I end up having girlfriends that either don't want to go to movies with me or don't like the movies that I like, or friends that don't want to go to the movies I like, and I wouldn't see them. And so I just find that it's I just want to go to the movies, so I'm just going to go by myself. And yeah, I guess kind of. I don't know where I'm going with this, but with Palantir, I didn't have the base, to hold, and I ended up selling pretty close to the lows. I have swung it recently. I'm no longer holding, but that would have been a really good one for me to continue holding. And AMC, you could argue not so much. But for me, this is what investing is about. It's about the pain. It's about having conviction. And whenever, if ever, I have doubts about the company, I have conviction in the people. I have conviction in that, there's this idea of Occupy Wall Street, of, people camping out on Wall Street, physically occupying the street of Wall. And, that's delusional. The way that you occupy Wall Street is doing what we're doing. And yeah, so I mean, I feel like this is a movement beyond just you or I, just like beyond the apes, beyond the meme stocks, beyond any securities. It's Yeah, I mean, this is, the conviction that someone like Warren Buffett has. And so this is an investment. And so if it's a quick trade, I mean, for me, this is not a quick trade, of course, but it's helped me to kind of prioritize, what in my portfolio is a longer term investment that I have belief, that I have conviction in, and what are other trades that I have that it's like, I want to, like, this is my level to buy, this is my level to exit, in and out. And so I've just, like, it's been a really great growth experience for me. And I would not have had that with AMC. I would have been like, I lost a bunch of money, I'm done. But I was like, no, I mean, I'm going to trim out of a lot of these positions, taking a loss. Lordstown Motors was one of those that went bankrupt. or delisted through bankruptcy, I believe. Also, more recently, Fisker. I've learned some hard lessons from that. But the thing that kept me here over the years has been AMC, has been the retail community, and has been, and I've been thinking about this recently. I really don't, like, I'm sure all of us don't like our jobs. And, I would really like to not just diamond handing something like AMC, but in trading is the way I'd like to make a living, and not even through ad revenue on YouTube. I feel like that's a little too difficult, or at least I'm not there yet. It's not sustainable enough. And I'm more interested in and out trades that might be a little more boring, or like I've been doing that with calls that expire in June. I took a little bit of profit today on some, and I imagine the other ones will be profitable later. But I like that's what I want to do. I want to be like kind of an individual trading firm. And I think that's one of the things that, like, we can trash Robinhood, we can trash what is it, whatever the order flow is. I'm drawing a blank right now, but those things definitely have bad intentions. But through the internet, whether that's Reddit, whether that's YouTube or X or any platform, any way that we can exchange with people and just share ideas, that kind of creates an opportunity where you really don't need to go into a job. One can make a living doing stuff like this. And I think there are a number of great examples on X. Some of you may not like them. I think Colin Gladman is a great example of a trader online. I've recently become a fan of Mr. Chart Norris. I think he does some really good analysis. Also, Bronx Viking, kind of in ties with Colin Gladman. There are just a number of people. I am a big fan of Gareth Soloway as well, as you guys probably know if you see what I post on the channel. And yeah, I mean, just think that there's a real potential to kind of disrupt Wall Street by retail, not simply buying and holding, which is what we've done with AMC, but learning kind of the psychological levels that retail typically gets exploited on, and retail will continue to get exploited on. But if we can have an edge as retail, as being like retail veterans from 2020 back in the day, and so for me, my kind of psychology with AMC, I've talked about it all the time, is just these two gaps, 291 and 685. I don't think 291 is going to get filled, and I think that when that doesn't happen and this one gets filled, I think people are going to start FOMOing in, realizing they're getting left behind. And I think this is going to go higher. Will it go beyond like 12 effectively? I don't know. I have no idea. It's very tough to predict these things, and it very tough to predict how long-lived they'll be. I do think one thing that I've noticed is whenever you see a big green candle like this, it's more likely to continue. Whenever you see a big red candle like this, and I see this in a number of like penny stocks that people request during the Sunday night ticker request live streams, lots of stuff. Whenever it's a big green candle, you can feel more confident it's going up. But whenever it's big and red and up, that might be a long-term high. And so I'm just going to check up on the comments. See, both buy and hold doesn't work anymore. Yeah, and so one of the things I've actually I've been contemplating it probably for maybe the past 6 months, but it's just like, it's tough to know how to talk about this. And I actually wanted to make a video about this with kind of using a dog and balls under the cup type of meme thing. But, I think one thing that retail needs to get better at, buy and hold is too predictable. If I'm a short seller and I know that retail is going to buy and hold, I know that when it drops here, retail's going to buy. And so I can then drive it up, retail's going to hold. Then I can sell, dump a bunch of shares, and I know it's going to dip lower, retail's going to buy. And then rinse and repeat. And so I feel like the way that retail really needs to have the edge, which I think is very controversial in the community of AMC, GameStop, and whatnot, is that I think if retail wants to get the edge. It wants to screw over the firms, Wall Street, the Melvin Capitals, the Citadel Securities. Buy and hold is not going to cut it. I mean, it will long term, I think. But what retail needs to do is, identify levels. And maybe I should do an evaluation of this move and see how could we have predicted that that was the top. I have this legacy line, 1143. I've left it up there. It was the high over here when we had this double top. That would have been, I'm sorry to say, none of us want to sell. We want to be here forever. 1143 would have been an excellent level to, whether it's cut losses or take profits. Because let's say I have 100 shares, just keeping the numbers easy, simple. I take profits there. That's $1,143. I take off the table when it goes up there. I sell my 100 shares up there. And then, from that move right here, I got it, in this Fibonacci retracement, the 786 there at 441. Then I buy those 100 shares back, either cheaper at 441, or I buy nearly 3x the amount of shares at 441. And that's how I think we get the, that's how I think we occupy Wall Street. It's not by going to Wall Street and setting up tents. It's not by buying and holding. It's recognizing levels and buying and selling. Not just buying and holding, but buying and selling, or buying and trimming. And I think that this is a really nice example. For me personally, I did not sell at 1143. During this move, though, with GameStop, I have a habit that I'm refining with selling covered calls. I sold too many GameStop covered calls, and I got pushed out of my position at current price, or at price weeks ago when it was a little bit lower, whatever. I would have been better just holding. But at the same time, it's like risk management. And I think that was kind of a risk management thing. I had mentioned I just paid off some debt when I trimmed that GameStop position, which I did not expect to do or really want to do. I did that based on the risk management around being in credit card debt. And so I used that to pay off some debt and to continue the thesis of buying and holding, whatnot. And now I don't have any more credit card debt. I do plan on getting a new one to take advantage of a $200 reward from SoFi. And I can make a video on that if you guys are interested on kind of my thesis with credit cards. But basically, a year and a half ago, I started opening up a bunch of credit cards to take advantage of rewards they were giving out, and then to move the money that I spent on the credit cards into savings, and or ideally it was to invest in Bitcoin at 12K. Bitcoin hit a low of just below 16K. I didn't do that. I regret it, but what can you do? I stuck to my thesis. But yeah, I mean, you can make, if you're disciplined, you can make more money with debt that has zero APR. That's why I got the credit cards, and that's why I'll open the new one from rewards that they give, and by any money that you spend on that credit card, putting it into savings to get that interest, which is like 4% now. So, but yeah, I mean, my thesis was kind of wrong. I ended up basically buying the dip, I think over here. Because there was this reverse split. I think it was around $8 I started buying back in around a year ago. I'm not sure. Not buying back in, but adding to my position for AMC. All of this is when I was like buying and stuff, or adding, I should say. But yeah, I mean, if we're just buying and holding, and so I'm going to check up on the comments because I did say some things that I think were relevant to the chat. And so, both buy and hold doesn't work anymore is what Sandy's saying. The V-shaped trader saying hedgies haven't covered. That's all that really matters. That's the same thesis with GameStop. I definitely recommend checking out Richard Newton, who does like daily videos. If you guys aren't familiar, they're just kind of, basically how I'm just kind of rambling about stuff. He does that pretty much every morning with coffee. It sense of community. And yeah, the thesis is there's the guy with the mustache that does kind of like conspiracy theory stuffs. I don't know his name exactly. I follow him. I could maybe I'll put it in the anyways, you guys either maybe you know, maybe you don't know, but post it in a comment after this if you don't know, and I'll share a link. Yeah, I mean, shorts haven't covered, and so these things should be going up. But if we're in situations where it's, we got bills to pay and whatnot, what are levels? And I feel like this prior high, was a technical level. So I think that's part of the thing, if we're just buying and holding, we're only learning, 2 words, buy and hold. But if we want to learn more about participating in Wall Street in an active way, getting into technicals is something. And so like here, there's that high, the double top effectively right around $12. We hit that, we pierced it. And so that, would have been a good, if buying back down here, that would have been a great level to sell and then buy back more shares than what was held up here. I think that's solid. But, then there's always the risk of maybe it keeps running. Maybe it runs to fill this gap up here. And so with that being said, and also like with Rivian, or was it Rivian? No, Plug, got rejected from like the base of a gap. So not at the top of a gap when it would be filled, but got rejected right around here. So, I mean, I could see for AMC next levels that we do pierce. Let's see, the high over here was 1660. And so, I don't want to suggest what anybody does or, anything, but I know that it's been a long time. And if people are in pain, I think that maybe the next level that we would pierce is either 1660 or 1960. And then maybe we'd pull back to hold this red line as support right around $12, stair-stepping our way up. And so maybe that would be a good, buyback level or something around 1143. So yeah, I mean, I don't know. I'm just rambling. And so I'll continue with the comments because there's more on here. With Sadie saying, I'm still holding in one of my broker's accounts at $21. And so for me, somebody else who is in the chat, Horatio, he always comments on the Friday videos that I do. Super nice guy. He's got a baby on the way. So I'm for many reasons, rooting for him, rooting for all of us. A thing that really stands out to me, I mentioned it earlier, this gap up here. I mean, this gap is actually not at $43 right here because gaps are based on the closes. And so the close here was at 46.41. Oh, 46.41. So I'm going to delete that and redraw it. Should be magnetic, but I think it's stuck to the... Wait, oops, wrong one. 46.41, yeah. I mean, there's a gap there. So... yeah, I mean, and one of the things, too, I feel like we're all probably the same in the sense that we start with a position, but then we end up adding more over time. And so we end up holding more than we initially anticipated. And so, yeah, I mean, I feel like if the average is 21, I don't know when this is going to happen. Like, maybe it's this year, but I suspect we only got a couple months left. Probably not. Maybe in 2025, but I have no idea. But I feel like 46.41, maybe there's something there. Adam did say, though, in the earnings call, he did say cash is king. And I feel like that's potentially, I hope he's not about to dilute more or anything, to raise some capital with shares. But maybe that's something that he will do if we see a rally in the next few weeks or next couple months, which I think we could do associated with activity with Roaring Kitty, just stuff that's been going on in the options chain, just looking at the chart, this two gap thesis that I have down here with $8, I feel like we could be going up there. And with Santa Claus Rally, people going to the movies, the fourth quarter being like the best quarter for the movies, popcorn continuing to increase in retail stores. You know, yeah, I don't know where I'm going with this, but yeah, I mean, if this goes up to a level where it's like, well, just basic numbers. I was initially planning on holding 100 shares, but now I have 200. If it goes up to your level and it's like supported by something in the chart, whether that's a gap fill or a prior low. I mean, I try to go over, how I find the levels in the videos. I try to go over the pivot points. So it's like you guys can do the same types of things in your charts. If there's a level that corresponds with your price or something where it's like, hey, I mean, I got double what I initially intended to do. Maybe I trim at break even or above. And then if it pulls back, I can add more and feel comfortable. Or if it keeps going higher, I still got that position I was planning on holding to never let go. Then, so yeah, I mean, I think that we all have to kind of evaluate that individually, not only based on our personal financial experiences and also with our just personal experiences. As time goes on, we're starting to have families, whatnot. For me, I'm pretty easy. It's just Ed and me. So I can do it. I don't have anything on the way. I know that that's different for all of us. So I think we got to just, do what's right for us as individuals first. And the worst thing I think about trading is not relating to AMC, talking about anything, is taking profits. Because whenever profits are taken, whenever a stop loss is hit, it's more than likely going to be at the bottom if it's a stop loss, but you got to manage that risk. Or if it's taking profits, that order doesn't get filled unless price goes through it. And so you're always going to be looking at a chart, man, I should have held longer. If it's something that can be as volatile as AMC and GameStop in the past, that's a different story. It's a different animal. But that's the trouble with it. And I think the psychology that we need to work on is support each other if it's in our individual interests to take some risk off the table. And with that being said, but then to be able to feel comfortable if it goes lower to add more. And so like, and I get this myself, when it's doing these big moves to the upside, I want to be adding more. I want to be adding to that dopamine or whatever it is, that rush. But really, I mean, this is the time to be doing that. So like for me, I always say, I'm a small fish. I have way, way more shares than I initially intended on having. But like for me, it's like, well, I want to get even more because I feel like it's in this 2-gap thesis window. And so that when it does go up to, these levels, whether that's 12, 16, 16, 19, 60, 20, filling this gap here, 46, whatever, if it is going to be a blow off top like this, I want to be able to be like 4 months being like, yeah, I am scooping the shit out of this as it's down, rather than being like, well, I got to make sure my bills are paid first. So yeah, I mean, I don't think that there's any like if retail wants to be supportive of each other, we have to appreciate that we've been in this for a long time. And everybody's averages are different. Everybody's got different situations at home, different situations at work, and even like outside of home with family, friends, extended family, friends, I should say, I guess. So we got to be looking out for each other. And so I just think that, I mean, for me, it's like there's this 2-gap thesis that I don't think we're coming down to 291. I think we're going to be filling this gap first. And at that time, I think that's going to trigger this gap's being left behind load, and then I think we're going to then go past this level to beyond 1143, beyond 12. And then I think we'd be getting up to this region, but it might be a blow off top kind of thing where we stair step with what are stairs? Stairs are a violent move to the upside and then consolidation. And that's how we walk upstairs. And so that's what we have here. Smooth it out. We got a violent, even just from here to here, that's a violent move to the upside, consolidation. And yeah, I just think it's going higher. And I'm looking at it in the corner of my eye, but still trading around 433 in the after hours. While that's a pullback, we've seen stuff launch 20% after earnings. We've seen stuff plummet 20% after earnings. Coming back 5.5% after going up about 4.5% on the day after going up over the past few weeks from this low from about a month ago, from the low of 403, we were up today at the high about 20%, 18.94%. And then now with price being around 433, we're still up 7.5% over the less than month, So I don't think that if we are opening up lower tomorrow, I don't think that's a really bad thing. I think that's just a part of we've moved up over the past month, and that's sustainable. That's we're going to be seeing it. There's going to be news coming out tomorrow, so this could be rallying more. But I'm going to check up on the comments again, and so let's see. That's bots, bro. I'm not sure what you're saying with bots, but yeah. If you guys are commenting stuff in there, make sure you're specific about it because I might check later. Over 1,800 shares not selling. Nice. Yeah, I think like prior to reverse split, I was planning on holding like 100 shares, but now I have over 1,000, and that's after reverse split. And I plan on being in a routine of adding more on like a daily basis. So sustainable, within paychecks and other trades that I'm in and stuff. And so, yeah. And I know that there are people who have tens of thousands, if not more shares. People have really put a lot into this. And people, and also 1,000 shares might be daunting to some people. It doesn't matter how many shares. It could be tens, or, even lower than that. Trading is emotional. And so I think it's good to be evaluating the charts. Understand market manipulation. Yes, 100%. And I think that like this right here to me, it's like, I've got this buddy, who it's like, if he texts me about Doge, it's time to sell. And so when you get that feeling, if like, family or friends who, haven't messaged you in a while, like, whoa, AMC's up, or, oh, whatever you're in is up. That's kind of a sell signal. And then, then that could be a reminder of, oh, okay, well, what's a technical level? 1143. Okay. And then pulling back to the 786. Yeah, that would have been a very nice trade there. Even if that's taking a loss here, that's could wait 30 days and could still be buying back at this level. Considering how AMC moves, big moves to the upside, long boring time to the sideways, because during these moves, a lot of people are buying calls when that premium's high. And then market makers, bleed out those contracts, that premium to zero. And then once they're all at zero, then it goes back up again. And so, yeah, this is like, even if this is cutting at a loss, wash sale can be avoided by waiting 30 days or a month, whatever it is, to buy back at this level and then continue on. And that sucks. You could be very antsy in that time. But yeah, I think that's a good strategy. And that's what algos and whatnot trade on is this stuff. And no more buying and holding, actually trading the stock. So as far as trading the stock goes, I talk about this all the time. I'm really compelled by it. And actually, for me, most of my buys lately, or as far as new positions go, have been options that are long dated. So like into like June of next year, May or June of next year, with a thesis of, I think the stock's going to go to this level in the next few months, but I'm going to buy it, 8 months out with the expiration, just so there's no pressure. And so I can dollar cost average into building a larger position rather than, buying all at once. And so like with AMC, I go over this in my weekly options videos, which I'll be doing Saturday evening. So I'll be doing it this evening after work. So it might be kind of late. So it might be like a Sunday morning kind of watch type of thing. But like I view AMC as going up to about $8 a share. And so I've been adding to $8 strike contracts that expire June 20th and building a position there, plan on selling at 100, 200, etc. percent increments. And so that's just a trade. And so while I'm like, accumulating shares, I can also be doing that with the plan of taking profits on those. And with AMC shares, I can do whatever, makes most sense to me. So yeah, I mean, I think that trading is a great thing to be doing, to be active in this stuff, looking at the technical levels. Like this to me is just like, I'm really impressed by that. Like I had that line drawn up before this happened. I didn't act on it though, but I think that the next leg up, because we're coming from a higher low, as long as we don't go below 238, which I don't think we will, that next leg could be, up to these levels. And then beyond that, maybe up into the 40s. And so let's see. Sandy's saying, I just hate putting more money on the stock and it continues to go down. So I feel the way that I've gotten used to trade or accumulating AMC, super boring. I can tell you what I did today. I'll pull it up on my phone. This is what I've been doing this week because I get paid Friday. And then managing this stock with others, options, whatever, because I want to be able to buy dips on all of these things. And so with AMC, what I've been doing this week is every close, it's like, what was the close? Okay, I'm going to place a limit buy order for 2 shares at the closing price. That's super lame, only 2 shares. But for me, between Monday of this week and Friday when I get paid, that's all I can really manage. And that's more than what I was doing the past, couple months, which was I need to just focus on paying the bills right now. And so, buying 2 shares, no big deal. It's $8. Do I go to Starbucks every day? No, I make coffee at home. And so, it could be 1 share a day. And so for me, I just do it at the closing price. And so today with the after hours price action, yesterday's close, the 2 shares didn't get filled. For today's close, the 2 shares did get filled. And so I'll just say, what those are if you guys are curious. And, it's like I'm very literally a pretty boring trader and don't, I work, 40-hour work week and stuff. So for today at 24 minutes after close, I have my limit buy filled at $4.39, which was yesterday's close, I believe. $4 and $4.39. And then because that was filled and because today's close was higher, I just did not a market, I did a limit, but at 432, bought another 2 shares. And, after hours, I saw that 420 was hit, and I just like to have fun with that number. I placed a limit buy for just 2 more shares at 420. I wanted to do 10 more shares at 420, but then it's going to be tougher for me between now and the paycheck. So it's like, no, I'll just do 2 shares. It's lame, but it's something. And I'm not emotional about that. That's, a cup of coffee. I went on a date with this girl, first date. Grab a cup of coffee, walk around a park. I got, it was in the afternoon, so I got like a dirty chai latte. I don't usually get stuff at coffee shops. I think there's only one person viewing, so it might be just talking to myself at this point. But anyways, just did that, and I thought it'd be like $5, like $8. That's 2 shares of AMC. And so, if you don't buy coffee every day, I think that's like a really nice way to just kind of remove the emotions. And when it's consolidating like this for this long, believe it or not, like let's see how many bars this is. So let's say including the max candle here, the top here, going up to today. That's 122 bars. That's an addition of 144 bars if that's buying 2 shares every day. That is not nothing. And that is dollar cost averaging. And one can set automated buys to do that, or one can do it just based on limit buys at the close. But also, I mean, if one's phase, like just over it, just chill. You got your position and just chill. But I think that the not necessarily dangerous thing, but the thing to consider with that is that, if it's like boring here, where like I'm over and I'm done with buying, and then it starts moving, and then it's like, okay, now I'm going to start buying, blocks of 10, 100, whatever shares, when, could have been doing that when it was boring here at cheaper prices. And so like, I feel like between $3 and $7, these two gaps, I think those are cheap shares. And I think that at some point we'll be seeing, prices higher than that. I don't know how high, and I don't know how long that will be lived, but we made a floor that was higher than the lows over here. That is, the floor. So I think that's good. Let's see. Just continuing on Sandy's comment. I think he's going to dilute at 560. I mean, he did say cash is king. So I feel like that's kind of a warning sign. So yeah, I mean, be prepared for that. That does make sure that the company's in better shape longer term. If we're going up to 560, I mean, I feel like because of what's been going on with GameStop, I feel like Unity Software, like regardless of what's gone on with that more recently, for me with Unity Software, I was ahead of everybody with that, identifying this channel and seeing like, I think it's going up to $45 a share at some point. Aside from like the community with that, I feel like those things are starting to get active again. And I think AMC is going to start moving again. So, I think it would be better if we raise some money at a higher share price, but I think we could be doing that around 12, if not higher. And then that's getting, if we're doing that at 16, then that's like we're getting a 3-for-1. So I think it's a better deal. But I mean, Aron is looking out for the long term, which I know is not always aligned with us who have been here for what is a long-term investment now, more than, 3 years. So yeah, I mean, I think that it's, and like me, I have a limit buy for 2 shares, pretty lame at $4.20. If that doesn't get filled this week, I'm going to up that. And then if there is some dilution, it does pull back to that level, then I'm getting more shares at a fun level. So, and if it doesn't get filled, then it's also just keeping cash on the side, so no big deal there. And so the V-shaped trader, saying to believe that regarding dilution, yeah, so be prepared for it. Chris, thanks for the comment. Preach, brother, 100%. Worked to bring my cost average down from $20 to $5.40 per share. Talk about exhausting. Congrats, man. I mean, I'm kind of getting into that phase of, I'm not sure what my average was before because it was before the reverse split. But I remember $8 and starting to add more aggressively there. And my average is $8.50 in Robinhood, which is like, I don't really, that to me is not a position I'm really like emotionally attached to. It's a smaller position. But my position that I have is my average is right around 10. And so starting this week, I've started getting that average down, just 2 shares a day. Next week, based on, what I move into my account, over the weekend, I'm going to kind of do the math and see, well, how many shares can I buy every day between now and the next paycheck with having stuff on the side for my other trades. And so I'm just going to keep doing that. And so I hope that I can get my average down to, let's see, 540. So congrats to you on that. And so with that being said, I am all caught up with, the live chat, but I do want to switch over to the 1 minute time scale from the after hours trading. It's now 7:09 Eastern, so there's about 50 minutes left in the after hours trading session. But something that we've done that I think, for me, based on the levels that I go over, that I feel like and felt like was a significant level, we were trading below $4.33 for the majority of the after hours trading session. We are now above that, trading at $4.35. As I'm recording this, the minute that we're at right now, down 5%, 5.02% in the after hours versus 5.5% or so earlier, and that's after going up 4.33% during trading today during the market hours. And that $4.33, if I do flip back over to the daily time frame, is this low, kind of like the secondary low from this time frame, or I guess really it's the tertiary low, $4.33. The secondary, I would say, is $4.10. And so this low, sorry, I should say the low of $4.33 was from June 25th. That I would say is the tertiary low. The secondary low was $4.10. That was hit on May 31st. And then the primary low, the low that we've seen following the big moves of May. Let's see. I think I moved something. That was, I keep moving these things that are, these levels that I drew that are grayed out. The more recent low was $4.03. And so, we're above all three of those lows. And we're above the highest low there, $4.33 if we look in the after hours trading, currently at $4.34.5. And so, while this might be discouraging that we came down after earnings, that's after going up almost 20% over the past month. That is with the company looking better, both financially as far as debt goes, both and also with strategy of improving locations, whether that's with the laser projection technology, whether that's with improving the seating, whether that's improving the screens with the XL stuff that we're going to learn more about tomorrow with the press release. Also with popcorn being, I feel like that's such a great business move because it's like coffee. It's cheap. It's cheap and you can mark up the price a good amount. And so popcorn's like that. And so I think that's just a brilliant move with that in these stores. They're expanding that to other retail locations. They're also going to be having more microwave popcorn in those locations. I believe Walmart and Kroger will now be holding the microwave popcorn, AMC popcorn, or maybe that's to start in 2025. I'm not exactly sure. And I know that one that stood out for me, I live in the Midwest, I live in Iowa, and the kind of like regional grocery store chain is Hy-Vee. Hy-Vee is going to be holding AMC or carrying AMC popcorn in 2025. So for me personally, I'm really excited about that because I will be able to share that experience locally with people, and or people will be able to experience, the passion that I have had with AMC, that when they go to the grocery store and they see that AMC logo, they'll think of me, they'll be inspired, and they'll pick up a bag of popcorn. So I'm really excited about that. And of course, with the, kind of like the markups as far as the experience goes, whether that's with food and beverage. We actually didn't hear anything about wine or beer, which would have been cool to hear about, but maybe we'll get some announcements about that. Or maybe I missed it. That's always possible. And then also with, popcorn buckets. I definitely want a Velociraptor head popcorn bucket. That would be pretty cool. Or, maybe like a Jurassic Park Jeep popcorn bucket. Maybe some Jurassic Park shirts, or Jurassic World, I should say, Jurassic World 4. So, movies coming out that, in the close of 2024 that are going to be really great. Next year, Jurassic World 4, more Avengers movies, and for me personally, I'm not super into those, but I know that there's some other ones with that. Also, Avatar, is that Avatar 3 coming out next year? So yeah, I mean, experiences that not only individuals will want to have, but they'll want to have with their families. One of the things that I found really nice more recently, I went to see Beetlejuice, and I'm not going to say that name again. I saw that by myself. That's how I tend to go to movies. I just phase my life, whatever. But I sat right in front of a young family, two parents with their two little kids. One of them had to change a diaper right at the beginning of the movie. So for me, not necessarily the most pleasant experience, but for me, it was really nice to see children getting to experience in the theater something as crazy as, I'm not going to say that name again, in the theaters, and kind of the less so in CGI, more so in practical, or at least the graphics were inspired by the original. Children getting to have that kind of experience with their parents. And so, I just think that's such a beautiful thing. And that's what the movies are all about. It's not about being, a lonely DJ going by yourself, which is what I tend to do. But it's about going with your families. It's about that experience. And there are so many movies coming out that I think really, I don't want to say capitalize, but facilitate that kind of experience. And yeah, and I feel like streaming services are kind of phasing out. I don't know about you guys. The only streaming service that I have is like Disney Plus, because I have it through my phone plan. I don't have Netflix. I don't have HBO. I don't have any of that stuff. I do try to go to the movies, at least, as work schedule permits and stuff, once, twice a week, something like that. And yeah, and just the streaming, I have my phone out, I check stuff. I don't like that. It's not an experience for me. Going to the movies, I turn my phone off or put it on silent, and I experience the movie. And I think that today, I think it's really valuable for us to stop scrolling, put the phones down, get a bucket of popcorn, Coca-Cola, and watch a movie with the family. And so, yeah, with all that being said, I was like, I am not going to ramble for an hour after the earnings call, but I ended up doing that. But yeah, thank you so much for hanging out. I will have a 8-minute video out on AMC on Friday, and I will have a 1 to 2 hour video on options, which will include 3 AMC calls that I'm personally partaking in, but I may be losing money in all of the contracts that I go over. I have no idea, but it's just me trying to get better at learning options, basing that on technical levels that I go over in videos, like I've gone over in the AMC ones. And so right now, I'm going to end this with us above $4.33. I think that's a good sign. And yeah, and good night, Sandy. Thank you for hanging out. Going to play some music bingo. Nice. Awesome. Yeah, go enjoy ourselves. I am going to basically just relax by myself this evening. Maybe go for a little walk, as that tends to help me relax. And yeah, I'm excited for tomorrow. I'm going to do some priming of siding before it gets too cold here. So I hate doing that, but it's my day off, so I'm going to be doing that tomorrow. But yeah, thank you all so much for hanging out. And I imagine, oops, sorry, that's an old thing. I meant to pull up this. If you are, new to the channel, make sure you subscribe. But if not, if you are a subscriber, please make sure you like the stream. And I will be putting out a video version of this with timestamps. I just think that those are a little bit more accessible. So I'll have that posted soon. But yeah, thank you so much for hanging out. And it's really great to share this time with you guys and just ramble about a stock that we love and the commitment that we're learning through investing and, being here for each other when the dark times are here. we at least have each other and know we're all going through it together. But yeah, thank you so much for hanging out. Take care of you guys. I hope that tomorrow, maybe we gap down, but close green. That's what I'm looking forward to with AMC. But yeah, take care of you guys. Relax this evening and enjoy it. Take care of you guys.